actually seeing some green on the screen. Even the Dow, which we thought might open in negative territory, is in the green, although is basically flat right now. Joining me now is Walker Williams, Chief Market Strategist at Lido Advisors, to dig into the market action. So good to have you on. First, I just want to get your thoughts on this market. Looks like we could be building on some of the gains that we've been seeing recently with more green on the screen. Are you a believer in the market, or are you skeptical at this point?
Good morning. I think the word is trust but verify. When you really think about what's going on, obviously inflation came out this morning a little better than expectations. There's still plenty of rhetoric from the standpoint of, hey, we got the tax bill finished. There are aspects of it which the market likes. There's a lot of aspects, honestly, the market doesn't appreciate. And we're heading into earnings season. And I think, while first quarter earnings were above consensus, we are seeing things in the market to give us a little bit of pause. There's narrow leadership in the S&P 500. Obviously the AI trade is still very strong, but we're going to learn a lot here in the next couple days with earnings continue to be released.
Yeah, and we did get some big names from the banking sector releasing results today. And I'm taking a look, JP Morgan, Citi, Wells Fargo, BlackRock, moving in opposite directions today. It looks like Wells Fargo is lower based on that kind of disappointing net interest income guidance. BlackRock is lower as well. Top line miss there, but Citi and JP Morgan adding to gains. The big banks have had a really impressive start to 2025. So want to get your reaction to the results that we've been seeing, and do you think that we'll continue to see strength in the financial sector?
Obviously JP Morgan surprised last night, especially with their deal-making revenue. A lot of, people in the market didn't expect that sort of revenue drive, especially from their investment bank. In general, when interest rates are high, banks tend to do pretty good just because of the standpoint of that income stream. The interesting thing with banks, in a lot of people we think should pay attention to this, is what they're actually saying. Jamie Dimon is talking about risks to the economy and uncertainty with tariffs, things of that nature. The banking industry, is also gripsing with things the rest of the economy is gripsing with, which is essentially uncertainty. We have more tariff rhetoric. We have things here going on with a consumer that is in late cycle. We're watching that, and very much credit card and loan delinquencies and what they could be doing to the economy. So far this year, the upper and middle class has really driven consumption growth. The question is, will that continue, or will we start to see a pullback in spending, which will then affect other aspects of the economy?
What are your expectations? Do you think this is a market that has more headwinds or tailwinds at this point, and what is the biggest risk to the rally?
I think it comes back to fundamentals, blocking and tackling. Valuations are high. They're higher than pre-Liberation Day. The question that we have are the fundamentals underpinning those high valuations. Obviously, the AI trend can be and is showing to be very disruptive. There are things here. We are late credit cycle. We're going back to the playbook. Quality matters. Looking at debt ratios and flexibility. We are very sort of cautious on valuations today and advocating more of a quality, steady state approach and looking for the right type of opportunities.
Can you dig into a bit more in terms of how you're finding or where you're finding quality?
Yeah, so when you talk about quality, let's define what we're looking at here. From the standpoint of quality, stable earnings margins, controlled debt, flexibility, strong cash on balance sheets, things of that nature. Obviously, when we're looking at that, there are plenty of opportunities here in the market. You're typically then going to go to companies where there's stable earnings, there is the ability to take advantage of what's going on. You're typically seeing things in infrastructure, in the financial services, in consumer staples, things of that nature that seem very attractive to us. Obviously, the AI trend is a different kind of animal with that. That could be very transformational. If you look at the Mag 7, obviously their earnings growth is vastly outpacing the market north of 20%. The revenue growth is high single digits. things of that, that is more of a, a disruptive trend that should be evaluated separately, in our opinion.
You talk about the strength in tech, but the reality is if you look at the sector performance of the S&P 500, we have seen a broadening out. We've seen strength in materials and industrials and financials, as we discussed, in addition to tech. Are you still finding any value in this market?
When we talk about value, it is a relative metric. The market as a whole, if you look at the headline, it is very expensive. There are subsets of individual names and individual sectors that look attractive, but this is one of those type of markets, if you're thinking about it, if you're not just looking at buying the market, you have to be going with an intentional view on what you're purchasing. Obviously you talked about materials, last week's sort of copper tariff. What does that play to that market going forward? From our standpoint, we do sort of want to be very cautious and talk about risk management in these markets. I think the next couple days will tell us a lot. The market is forecasting, honestly, earnings growth to be the lowest since the fourth quarter of 2003. That is all sort of late cycle-esque behavior. Those sort of things, you got to sort of look at this as, hey, what are these fundamentals telling me? Where is fair market value? What are we doing? Obviously, when we talk about value, typically those names have a dislocation where it's like, hey, this is where we think that name is going to be. This is where it's trading. Obviously, there's some narrowing in the markets, and you're talking about different sectors which have performed, resiliently lately. But from our standpoint, it's very much old school. Hey, let's think about this. We have to have a thesis. We have to be disciplined with the data. If there's volatility, which we believe going forward, we'll see a lot more volatility, there could be an opportunity to then get some sort of disruption and better pricing on various sectors if that were to happen.
Okay, we have to leave it there. Appreciate your perspective, though. Walker Williams, Chief Market Strategist at Lido Advisors. Still to come after Bitcoin.